Joining me now, Jeff deGraaf. He's Renaissance Macro Research Chairman. It's good to see you. We've been talking about this on halftime a lot. You look at Alibaba and some of these other names, they look pretty good, you suggest, from the charts.
Yeah, 100%, Scott. And I think, unlike what we're seeing here in the States, which these AI names have been leadership now for, 2 or 3 years, you're just seeing these big base formations in China start to break out. So you can make the case that they're really just starting this journey after these long consolidations and, frankly, a bear market that went on after the 2020 peak. So I think they're set up really, really nicely. Obviously, I am all for the U.S. winning the AI war, but certainly we haven't won it yet. And you can see that in the charts, that the tech stocks, the Chinese tech stocks relative to the U.S. tech stocks are right there. They're performing very, very well with the Russell 1. They're performing well with our tech as well. So, I think there is this instead of a Cold War, a compute war going on, and it's neck and neck at this point.
I mean, investors are going to always, not always, but they're going to bring up the issue of, can you trust this trade? What looks great today may not look great tomorrow. Can you trust investing in China? Just given the current environment, there was it's not investable moment that seemed to have lasted for the last couple of years until now. How do we deal with that when we just look at charts that look okay?
Well, I think you have to ask, is it in their own self-interest to have those investable or not? And I think it is. It's in their self-interest to at least compete on the AI front. It's, obviously politically, it's in their interest to stay in power. And I think all those things are above and beyond kind of the rule of law or some of the concerns that are here. And keep in mind, Scott, those concerns or that narrative that China's uninvestable really started closer to the bottom than the top, right? People didn't worry about it when they were making money. And I think that's one of the dangers is that you can create a narrative to kind of fit what's happened to price. And I'm afraid that that's what's going to happen here is that, these stocks will double or maybe even better. And suddenly people won't care about is it investable because they've missed out on it. So I think that's a healthy skepticism. And we actually view that in light of the charts as just another reason why these things can move and be pretty substantial from here.
But they've already, like Baba is a perfect example. We have it on the screen. Guys, let's put it back, please. The move has been parabolic. Look at it. I mean, especially as we've entered the latter stages of the summer and into the fall, a move that's taken the stock up, it's a double year to date. You're suggesting that it can go up a lot more than we've already seen?
I don't know how good your guys are, if they can pull up a 3-year chart, I'm going to tell you,
yeah,
I think
it can
double. I think it can double in the next 18 months. So I think this is just the beginning of a huge, huge move that goes back. And if you use it on a logarithmic scale, it looks a lot better. It always looks more extended when you use an arithmetic scale. But if we take this back, you're going to see those old highs, and they're basically a double from here. And I think you've got to look at challenging those old highs from here.
And that's how good they are. Not only can they do it, they can do it right after you say it.